Hi and good day to all of you. Welcome to Scholar's Choice. Thank you for the huge support that you had given for my previous video. Keep supporting me so that I can bring you free lectures on different topics which is trending as well as static. So today's topic is suggested by one of our subscribers. So you can also connect with me to suggest any topic through my Gmail, Telegram or Facebook page. So keep supporting me. Watch the entire video till the end. So let us continue. So today's topic is on GST, that is Goods and Services Tax. So in this lecture, I will be providing you the full information about GST. That is, what is GST, on whom it is levied, who reaps the benefit of GST, that is, who uses the GST which is collected from the consumers side. So each thing will be explained in detailed way. So keep watching the entire video. If you have any doubt, please drop in the comment box. Before going to GST, let us discuss what is tax. So, a tax is a compulsory financial charges which is levied by the government on an individual or on an organization. So, it is a financial charge. That means it is in terms of money. And it is levied by the government. So, it is the obligation of the individual or organization to pay taxes to the government. So, it is a financial charge which is levied by the government on an individual or on an organization. So, we discussed what is tax. Now, let us discuss why there is tax. So, it is in order to generate revenue. So, tax is considered to be the revenue of the government. So, though we know that the government has many other sources of revenue, but still tax is considered to be the major of share in the revenue part. Next is the income redistribution. What do you mean by income redistribution? That means a person who earns high income, he is being taxed, and this taxed amount is being redistributed to the person who is earning less. That is income redistribution. I am explaining you in simple terms so that you could understand very well. So this is income redistribution. Then promoting savings and investment. This comes to figure when we discuss about the Income Tax Act 1961, where the section 80C provides us with the deduction from the income tax. That means if we invest in something or we provide savings in something, we get deduction for the same. For example, if we contribute to the Provident Fund, we have a deduction under the section 80C in the Income Tax Act. So, we don't want to pay tax for such amount that we have contributed to the Public Provident Fund. Next is the promotion of growth. That means to the backward areas. It is mainly considered with the backward areas of the country. Backward areas of the country. That means the states or regions which are backward, which are especially economically backward. So, tax is collected for that the promotion of such areas could be brought to front. So, we had discussed about what is tax, why it is being levied. Now, we shall discuss about the types of taxes. Actually, the tax can be divided into two categories. First one is the direct tax and the other one is the indirect tax. So what is direct tax? The tax which has an incidence and impact both on the same point is the direct tax. Example, income tax. I will explain what is incidence and impact of tax, but let me tell you, this is direct tax. Next is, what is indirect tax then? The tax which has incidence and the impact at different points is the indirect tax. These are imposed on either the producer or the trader, but it is generally the consumer who bears the burden of the tax. So, in direct tax, the incidence of tax and the impact of tax will be same person, but in indirect tax, the impact of tax and the incidence of tax will be different at different points. That lays at the different points. One will be the consumer, other will be the producer. So we have talked about two concepts, which is the impact of tax and the incidence of tax. The point of imposition is considered to be the impact of tax. That means where the tax is actually being imposed. That is impact of tax. Who is liable to pay the tax, but he is not paying the tax. He is not actually paying the tax. He is shifting this burden to the other person. So that other person is considered to be the incidence of tax, the point of settlement. The final settlement, who is paying the final settlement, is considered to be the incidence of tax. When it comes to an example, the retailer is considered to be the impact of tax and the buyer is considered to be the incidence of tax, because the retailer is actually liable to pay the tax, but he is not paying the tax and shifting that burden to the buyer, and buyer is the final point where the tax is being settled, and he is considered to be the incidence of tax. Now let us discuss about the tax reforms in India. So we are discussing about how we reach the GST. So it starts from 1991, a Raj Chalia committee who recommended the VAT system. Then it comes to 2002, the Vijay Kelkar committee. That means the government was forming a task force for the recommendation of tax reforms under Vijay Kelkar. So he was the person who recommended for the GST system in India. So it was in 2011, as 115th Constitutional Amendment Bill, for the first time GST was introduced in Lok Sabha. But it wasn't passed. It was again introduced in 2016 as 122nd Constitutional Amendment Bill, and in 8th September 2016, as the bill was passed, the President signs on this date and it becomes an act. It becomes a Constitutional Amendment Act. It is the 101st Constitutional Amendment Act. And in 2017, this tax come to an effect. That means it was implemented in India. So we shall talk about VAT or value added tax. It is the tax collected on value addition, that is on each stages of production, that is from collecting the raw materials and it passes through the various stages of production and reaches to final consumer. Till that stage the tax is being collected. So the tax is being collected from the supplier who supplies the raw material, then the manufacturer who manufactures the raw material, then the transport and storage, the person who is providing such facility, then from the final consumer. So at each stages the tax is being collected. So we can tell that it is a multiple point tax collection. Then it is a consumption based rather than income based. It is based on the consumption. If you want to consume that product, regardless of your income, you have to pay the VAT. Then it is having a cascading effect. That means it is having a tax on tax effect. Let me explain you the cascading effect of VAT with an example. So this is the stages of production that a product goes through. You can imagine any of the product as you wish. So here the raw materials are brought at the cost of 100 rupees and the 10% tax is being charged on the cost. So while the supplier of the raw material sells the raw material, he adds up his tax plus cost. So his tax is being added with his cost. Now when it goes to the manufacturer, he adds up his cost with the purchasing price of the manufacturer. So he had bought it for 110, right? So next he would be adding up his cost of 50 rupees and it becomes 160. And again the process goes on. 10% tax is being charged on 160, which is 16 rupees. So this 16 is added again with the 160 and it becomes 176. So the process goes on till it reaches to the final consumer. So here at final consumer the price is 30 rupees. So the 30 rupees is charged along with the purchasing price of the storage and transporting facility. So 30 rupees is being charged and again here also a 10% tax is being charged on the cost. So he has to pay a 10% tax. So what he does, he adds up the 10% tax while selling to the final consumer. So final consumer will get this amount, that is 294 rupees. So the final consumer has to pay 294 rupees to get that product. So this much tax has to be paid. So the actual cost of the product is just 220, that is 100 plus this 50 plus 40 plus 30. So it is just 220, for which he has to pay 74.2 as tax only, as VAT only. As only VAT he has to pay 74 rupees. So this 74 is added along with the 222, which becomes 294. So this is cascading effect. So once the raw materials is bought for 10 rupees, again this 10 is added along with this 16, right? 6 plus 16. It is actually like that. This person adds 10% of his tax along with the cost. So again this manufacturer, what he does, he is actually calculating his tax as 100 plus 10 plus his 50. So this process goes on till it reaches to the final consumer. So this is cascading effect. This is tax on tax effect. So tax is being again taxed at each level of production. Now let us discuss about the GST, Goods and Services Tax. It is implemented with the goal of one nation, one tax system. So here I had given some example. That is, these taxes are now subsumed under GST. There is no separate taxes called luxury tax, entry tax, octroi, VAT like that. It is all as it is now known as GST. Next is, it is comprehensive. As I told you, it is subsuming all other indirect taxes. It is multi-stage because GST also collects taxes at each level of production, but this will be given as input tax credit. I will explain you in detail as we move on in our lecture. Then it is destination based. That means the state which is receiving the product, Indian state I am telling. So the state which is receiving that product has to pay GST, not the state which is making that product. Then it is collected in the point of conception rather than the point of origin. As I told you, it is destination based. So it has 5 slab rate. It starts from the lowest slab rate of 0% to the highest slab rate of 28%. So there is a schedule in GST. So each schedule explains the slab rate of the product. That means which product falls in which slab rate. So what is the percentage of GST in the product? Next, it mitigates the cascading effect. That means we have seen that VAT is having a tax on tax effect, right? So this GST mitigates such an effect. Next is, France is the first country to implement GST, and it is Assam, the first Indian state to implement GST. Then we know GST Council, it is a constitutional body, and GST itself is a constitutional body. So the article related to the GST is 246A in the Indian Constitution. It is related to the GST. Now let me explain you how GST mitigates the cascading effect with the same example that we had used for the VAT system. So same here, the raw materials are bought at 100 rupees cost and 10% tax is being charged on 100, and here we can see an extra column called actual tax liability. So this is the tax that he has to pay in actual terms. So as this is the first stage of production, the tax here becomes the 10 rupees itself. So this 10 is added with the 100 and his selling price will be 110 rupees regardless of the profit. Now the manufacturer buys the raw materials at 110 and he adds up his cost of 50 rupees and it become 160 rupees, upon which 10% tax is being charged, which becomes 16 rupees. But his actual tax liability will be only 6 rupees. That means the 10 he has already paid while he was purchasing the item. So now this will be given as input tax credit to the manufacturer. So now the cost will be, that is the selling price will be 166 rupees, 6 plus 160. When it goes to the next level of production, the 166 along with the cost of storage, that is 40 rupees, will be becoming the cost. So it becomes 206 rupees. So upon which 10% tax is being charged again and it becomes 20.6 rupees. So here we had already paid 16 rupees, that is this 10 plus 6, 16 rupees. Now that will become the input tax credit and this will be deducted from his tax liability, that is 20 minus 16, 20.6 minus 16. So it becomes 4.6. So this 4.6 is added along with the 206 rupees and it will become 210.6 rupees. Now at the final stage, the 30 rupees is being added along with the 210 and it become 240. Now as we did as earlier, 10% tax is being charged and it becomes 24.06, but as he will receive the amount that he had already paid at the previous stages of production as the input tax credit, now his actual liability will only be 24.06 minus 20.6. That will become 3.46. So this is added up along with the 240.6 and it becomes 244.2. And this is the final selling price. So when it is compared with the VAT system, it is 50 rupees less than the VAT system. So when it is comparing with the VAT system, it is lesser with the implementation of GST. So I hope you understand how GST mitigates the cascading effect. Now we shall talk about the exemptions under the GST. That means certain goods are exempted from GST. So there is no need of paying GST for certain goods. These are some list of products and services which does not require to pay GST. Products like petrol, alcohol, then supplies of goods to special economic zone, then fresh vegetables, fresh milk, that is supply of 0%. We had discussed while we were discussing the GST, there is a 0% slab rate, right? So fresh vegetable, fresh milk falls under the 0% slab rate. Then transportation of individual via public transport, then agricultural products, then transportation to outside, the agricultural products which is being transported to outside, it is also exempted from GST. Then the electricity distribution, then the goods and services which is less than, the transportation of such goods which are less than 1,500. So these are some list of products and services which are exempted from GST. Next we are talking about the GSTN, which is the network which is non-profit, non-governmental that manages the entire IT system of the GST portal. The GST portal is the digital place where you register your business enterprise, where you file your returns, where you collect your refunds, etc. So this portal is being managed by the GSTN. So when you visit a shop and you can see in their cash counter area, there is written GSTN number. It is a number which is registered with this network. Now let me tell you about the GST Council. The GST Council consists of the Union Minister as the chairman, the state finance or revenue ministers, the ministers who are in charge of finance or taxation, or other ministers which are nominated by the state government. So these are the personnels who are the members of GST Council. Now let us move on further and discuss about the GST Council. So GST Council, it is constituted by the President under Article 279A of Indian Constitution. Now when it comes to the voting power of the GST Council, 1/3 of the voting power lies with the center and 2/3 of the voting power with the all other state. So center and other state. So center has 1/3 power and other state, all state of India is having 2/3 power. Then when it comes to the decision, the majority is 3/4 of the majority. So it needs more majority, right? It is not just a half. It needs more majority. Next is about the types of GST. First type is the sender GST. Sender GST is the GST which is levied for the product within the state itself, but it is collected and imposed, both imposed and collected by the central government. Next it is the state GST, which is collected and imposed. First is imposition, right? So first it is imposed and collected by the state itself, and it is within the state territory only. That is also intra-state. Next it is the union territory. Union territory means within that union territory only. Within that union territory only. Then next it is the integrated GST, IGST. We have seen that IGST, which is for the state as well as union territory, but it should be interstate or inter-union territory. Here especially this two union territory, it should not have the legislative assemblies. Example, Delhi and Puducherry. So, integrated GST means it is the GST imposed on interstate goods and services. If there is a production and transportation of goods and services within 2 or more states, then IGST is imposed. Now we shall discuss the advantages of GST. The advantages of GST can be categorized into 4. First is the government, next it is the trade and industry, then to the states, then finally to the consumer. First to the state, it is a unified national market. It provides unified national market. That means the whole country becomes a market, single market, as there is only one taxation system now. So, there is having a uniform market in the country. Then, it mitigates cascading effect. I very well explained in the previous slides. So, it is mitigating the cascading effect. Then there is a harmonization of law. Why there is a harmonization of law? See, the state as well as the center both has the power to implement taxation. So, now there is a harmonization of law. There is no conflict between the state or the center that one is implementing tax and other one is not getting that benefit. Now, there is no such cases here. So, there is harmonization of law. Now, let us discuss what the trade and industry would receive as an advantage with the implementation of GST. Ease of doing business. Now, there is no hassle in doing business as it is fully converted to the GST portal. Now, simplified procedures. Simplified procedures means, as I told you, the registration, the return filing, then the claiming of refunds, everything is in the IT systems now. So, the procedure is very simplified. We don't have to walk around for the same thing for a long time. So, it is just in a click. So, it is just in a span of time. So, next is the elimination of double taxation. There is no tax on tax system now. Again, tax is being collected on the same product, on the same goods, same services. Such a thing is not there. Now, let us discuss about the advantages to the state. Now, this is expanded slab rate. So, now the state can implement tax with an expanded slab rate. So, earlier they were having a lower slab rate. They can implement within that limit only. Now, the slab rate has been expanded. Next is the power to tax. So, when I discuss about the harmonization of law, I told that now the state has the power to tax certain items. Next is the more investment. So, we know there is no hassle in doing business. It is ease of doing business. The procedures are being simplified. So, there is more investment will be coming. More foreign investment will be attracted and there will be a making in India process. So, such things will be there. So, this will promote the growth of the nation as well as state. Now, what is the advantages to the consumer then? It is a price transparency. Now, he knows for a product that he purchases, what is the GST it is collecting. How much GST is being collected on that product. So, only that much can be collected from the consumer. Earlier, there was no price transparency. How much the retailer claims for the product, the consumer has to pay for it. With the implementation of GST, there becomes the price transparency. Next is the price reduction. So we have seen that a 50 rupees price reduction has seen in the previous slide. When we compare it with the VAT and the GST is having less amount of cost or selling price. So in the long run, there is a more chance that the prices of the product goes down. So these are the advantages of GST. So as we conclude, I would like to say the current status of GST. So it says that the product which are under the slab rate of 18%, it has resulted in the reduction of prices, because in the pre-GST regime, that is before GST, these products were multi-taxed and imposed the taxes and which reached up to 32% taxation. So the products which are under the 18% slab rate, earlier it was 32. It would be reaching to 32. So as a result, the price of the product has become less. Now the other products which fall under the 28% slab rate, it covers the luxury tabs and sin goods, that is not good for the population. It becomes the greater source to the government. So it is the luxury tax, so it is becoming the great source to the government. Next, it is telling that out of the total Indian state, 14 states showing increase in their revenue as compared to the pre-GST regime. So before GST, now the 14 states are showing increase in their revenue. There is no need to fill gap of revenue by the center to the state. So this is the current status of the GST in India. So we are reaching to the end of the lecture. Thanks for watching the video. Keep supporting. Your support are my strength. So keep supporting. Please do comment, like, share and subscribe. So you can also suggest any topic that you wish to hear about. So keep supporting. You can expect more lectures from this channel. So thank you so much for watching the entire video. I think and hope that you gain some knowledge about the taxation system and the GST. Thank you so much.